Let's begin our amendments class with the first topic, that is default tax regime. Spelling mistake, regime. Okay, default tax regime. So 115 BAC. Now, so directly I'll go to this. See, earlier, before default tax regime, the same section is called as optional tax regime. Earlier it is called as optional tax regime. And now how it is renamed as? It's renamed as default tax regime. So what is the default tax regime? Here you are having concessional rates of tax. Here you are having what? Concessional rates of tax, which is applicable for individuals and HUFs. Even for companies, even for cooperative societies, for all of them also default, concessional rates of tax were given under different sections, 115 BAD, 115 BAB, like the different sections were there. But at CA Inter, we don't have those sections in our syllabus. In CA Inter, we are only having concessional rates of income tax only for individual and HUF. The objective of default tax regime is very simple. The objective is to provide concessional tax rates. So where income tax department will be charging you tax at a very concessional rate. Generally, what are the rates of tax that are applicable for an individual or HUF? What are the rates? Slab system up to 2.5 lakh, 0. 2.5 lakh to 5 lakh, 5%. 5 lakh to 10 lakh, 20%. Beyond 10 lakh, it is 30%. In case of senior citizen who is an individual resident in India, aged 60 or more, for him, initial slab limit is 3 lakhs. For a super senior citizen who is aged 80 years or more and a resident individual, for him, the initial slab is 5 lakhs. So 5 to 10, 20%, beyond 10, it is 30%. And we know, that is called as normal tax system or normal tax regime. Now that normal system is referred as optional tax regime. Now the normal system is referred as what? Optional tax regime. Now, by the way, what is a default tax regime? You see the word, initially they used the word default, which means by default, income tax department assumes you are going to compute income tax liability using these tax rates. By default, when you are filing IT return, by default, you are going to compute using these tax rates. By default, you are going to use concessional income tax rate. It's a concession. They are giving tax concession by reducing the rates of income tax. By reducing the rates of income tax, by keeping multiple slabs. Now, now they are charging at a reduced rate, right? Not everything will be given at free of cost, obviously. So concession is not given at just like that. They have given certain conditions. The income tax department has kept certain conditions. The 115 BSE, as per section 115 BSE, you are having an option. By default, you can pay tax at this rate. If you don't want this option, that's a different story. But you can pay tax by using this option, where at the concessional rate, nothing but up to 3 lakhs income, you can pay tax nil. 3 lakhs, what is this 3 lakhs? Before, no, in the Finance Act 2022, no, this is a Finance Act 2023 amendment. Before Finance Act 2023, old scheme, no, in the old scheme, no, this limit is going to be 2,50,000. At the time, for every 2.5 lakh, we have tax rate. Now, for every 3 lakh, the tax rate will increase. The tax slab rate will increase. Up to 3 lakhs, the tax is 0. 3 lakhs to 6 lakhs, the tax is 5%. 6 lakhs to 9 lakhs, the tax is 10%. 9 to 12, 15%. 12 to 15, 20%. Beyond 15, it is 30%. Now, let us do one small calculation. Suppose if the SSE total income is 15 lakhs exactly, let us assume. Now, under default tax regime, how much tax he will have to pay? Under normal provisions of the income tax, normal provisions, that is what is called as optional tax regime right now. As per Finance Act 2023, default tax regime means 115 BAC rates. Optional tax regime means normal rates of tax given in the Finance Act. Getting it? So let us assume, let us calculate tax up to 15 lakh rupee, how the tax amount varies. Now under default tax regime, up to 3 lakhs, how much? 0. 3 to 6 lakhs, how much? 5%. 6 to 9 lakh, how much? 10%. 9 to 12 lakhs, how much? 15%. Then 12 to 15 lakh, how much? 20%. Correct? Just check it out. So 5, 10, 15, 20. Correctly? There is no 25%. By the way, remember, straight away, once 15 lakhs crossed, straight away flat 30%. Now, let's calculate. So, 0 at 0% means 0. So, 3 to 6 lakhs means 3 lakhs into 5% is 5% is 15,000. 6 to 9 means 3 lakhs. 3 lakhs into 10% is 30,000. 9 to 12 means 3 lakhs. 3 lakhs into 15% means 45,000. 12 to 15 lakh, which means 3 lakh. On the 20% means 60,000. So how much is this? 60 plus 60, 120 plus 30, 1,50,000 is the basic tax. What is the basic tax amount under default tax regime? If an SSE is having 15 lakhs income, what is the base? I'm talking only about basic tax, remember. If at all SSE total income cross 50 lakhs, 10% surcharge applicable. If at all you're going with the default tax regime, no. You have surcharge, everything else is, everything is common. But the surcharge rates under 115 BAC, if at all you are declaring income under 115 BAC, the surcharge rates, the surcharge slabs are slightly different from normal income tax rates. If you like the next, in the marathon, you will find basic concepts timestamp in the marathon, income tax marathon. Inside that, I specifically spoke about normal tax regime in depth. Getting it? So this is amendments class. Inside that marathon, in the marathon also amendments, the same whatever I'm discussing right now is there even in the marathon video also. Getting it? Fine. So under normal tax regime, surcharge is in 5 rates. 5 surcharge rates we have. So 50 lakhs to 1 crore, 1 surcharge rate, 1 crore to 2 crores, 1 surcharge rate, beyond 2 to 5, 25%, beyond 5, 35%, and one category is there where surcharge rate is 15%. So 37% surcharge is the maximum surcharge under normal tax rate. But under default tax regime, whatever your income might be, maximum surcharge rate is 25%. Here it is a very big benefit. But anyhow, if an SSE is having income less than or equal to 15 lakhs, especially if an SSE whose income is less than or equal to 15 lakhs only, default tax regime or normal tax regime, there is a variation. Once if the SSE income crosses 15 lakhs, the tax rate is going to be 30%. Even in the normal tax regime, the moment it crosses 10 lakh, it is going to be 30%. The moment it crosses 15 lakh, it is even, of course, it is going to be 30%. If your income is more than 15 lakh, your basic tax rate, your tax rate is going to be 30 anyhow. There is no much variation. Now, let us look at, let's look at normal person, normal SSE, up to, if at all his income is 15 lakhs, how tax amount will be? First to 2.5 lakh, 0. 2.5 to 5, let's assume is a normal citizen. 2.5 to 5, 5%. 5 to 10, which is 5 lakhs, 20%. Beyond 10 means which is 5 lakhs at 30%. Let us look at this 1,50,000, which is 1 lakh, which is 12,500. So all put together, how much it is? So 5 lakhs into 30% is all put together. So 2,62,500. 2,62,500. Let me once again check it. So if at all you are going with the normal tax, default tax regime, initial 3 lakhs tax is 0. Next 3 lakhs tax is 5%, 3 to 6. The next 3 lakhs, 6 to 9 lakh tax at 10%, which is 30,000. Next 3 lakhs tax is at 15%. So 3 into 15, 45. That next 3 lakhs, 60. So 3 lakhs, right? 3 lakhs multiplied by 20%, which is 60. Now, as a whole total, suppose if you are having income 15 lakhs under default tax regime, your tax level is coming 1,50,000. Same 15 lakhs income if you have under normal tax regime, your tax is going to be, here 1,50,000, here it is 2.6. So approximately the difference is 1,12,500 rupees difference. So obviously, since tax amount more than 1 lakh, approximately if I have to apply a percentage, as a percentage, 1,12,500 divided by 1,50,000, 75% extra tax you are paying, percentage wise. Under default tax regime, between default tax regime to normal income tax rates, how much tax you are paying? 75% extra you are paying on the same income. But the point is, here income means total income. Here also income means total income, but this total income is after chapter 6A deductions, after various exemptions, after various deductions, whereas this total income is excluding chapter 6A deductions, excluding various exemptions and all. You can't claim additional depreciation under default tax regime. If you want to declare income at concessional rates like this, concessional tax rates like this, there are some conditions for you. Like, what are the conditions that you are having? What are the conditions that you are having? You see, if at all you are a salaried employee, you cannot claim entertainment allowance and profession tax as deduction. Of course, entertainment allowance maximum deduction is 5,000 rupees. That too, it is only for government employees. Not a big deal. Profession tax also year full maximum it will be 2,500 rupees or 3,000 rupees profession tax. So these two deductions you will not get if you want to pay tax on total income at default tax concessional rates. So you will not get deduction under these two. That's not a big deal. You will not get deduction for leave travel concession. You can't claim exemption under 10 subsection 5, 10 clause 5 for leave travel concession. You cannot claim exemption for house rent elements. You cannot claim exemption for house rent elements. Not only that, you cannot claim exemption for various allowances that you are going to get. Various allowances under income from salary, you are getting various allowances. 10 subsection 14, you are having so many allowances. Some are fully taxable, some are partly taxable. Forget about partly or fully, all that. You are not going to get exemption under 1014 at all. You will not get exemption for these allowances. Those allowances are fully taxable. How HRA is fully taxable. Leave travel benefit is fully taxable. You will not get deductions under entertainment tax, profession tax. But remember, once upon a time, in Finance Act 2022, up to assessment year 23-24, nothing but previous year 22-23, standard deduction also they won't get. But now, even if you are declaring income, even if you are computing income as per 115 BAC, even if you are computing income as per 115 DAC, you will still get, even if you compute standard deduction, you will still get. That's why you see, conditions to be satisfied. The following are the conditions to be satisfied for availing concessional rates of tax. In order to get these concessional rates of tax, getting it, you have to satisfy the following conditions. What are the conditions? The following deductions, following exemptions would not be allowed. You will not get the following deductions, following exemptions. What you will not get? First one, entertainment allowance you will not get. Profession tax you will not get. Leave travel concession you will not get. HRA you will not get. Suppose if you are a salaried employee, these many deductions you will not get. 10 subsection 14, various exemptions you will not get. But there are exceptions to this particular 1014. Only these items you can still claim. Transport allowance exemption, transport allowance up to 3,200 rupees deduction you can claim. No. Whether you are declaring under normal tax regime or default tax regime, 3,200 rupees per month up to transport allowance can be claimed as deduction. That too only a blind and deaf and dumb person. Getting it? Or orthopedically handicapped employees, they can claim. Traveling allowance, daily allowance, convenience, these are generally given for official purposes. These allowances are generally given for official purposes. These allowances are exempted up to spend. Whatever amount you spent actually, suppose company gave you traveling allowance. Traveling allowance means what? Traveling allowance means allowance given for you to travel to various cities for official purpose. Official purpose allowance, how come it's a benefit to me? So it is exempted to whatever amount you spent. Suppose company gave you 10,000, you spent 8,000, 2,000 only taxable. Getting it? So 8,000, can I claim deduction? You can claim. So whatever amount you spent, that much amount you can claim deduction. Daily allowance, conveyance allowance, uniform allowance, all those allowances you will get deduction, which are of official nature. You can claim deduction up to the amount it is spent. Transport allowance means what? It's an allowance given to blind, deaf, dumb, orthopedically handicapped, or even for other employees also, to come from office to home, home to office, to commute from office to home. So getting it between home and office commutation purpose, if allowance is given, that allowance is called as transport allowance. That is fully taxable. That's an income. Will you get an exemption? Yes, exemption is there up to 3,200 per month. Can this exemption be claimed by SSE? Who is declaring under default tax regime? Absolutely, he can claim. That's why I called this exception. Remaining all other allowances under 10 subsection 14 which are exempted, you can't claim. Suppose if a company is giving you Hilaria allowance, fully taxable, no exemption at all, no deduction at all. Suppose a company is giving you children education allowance, fully taxable. Generally, for children education allowance, how much exemption is there? 100 rupees per month per child, maximum of 2 children. Hostel allowance, 300 rupees per month per child, maximum of 2 children. These allowances and all, you can't claim deduction. You cannot claim deduction for these allowances. Getting it? So under 10 subsection 14, no deduction can be claimed under salaries except transport allowance deduction, travel allowance deduction, and any allowance paid to you outside India for services rendered to government. Getting it? Services rendered outside India by a government to a citizen of India. Actually, by a citizen of India to the government for services rendered. Any allowance paid. Remember, you see that any allowance or perquisite allowed or paid outside India by the government. If a government is giving you any allowance to a citizen of India, why a government is giving? For services rendered outside India. So you are providing some. Suppose you are working in foreign service department of the government. So you are working outside India for government purpose. Whatever allowance you are getting, fully exempted. This allowance you can claim deduction. Travel allowance you can claim deduction. Transport allowance you can claim deduction. Remaining all other allowances you cannot claim deduction. You cannot claim HRA deduction. You cannot claim leave travel concession. You cannot claim entertainment allowance, profession tax allowance, nothing. Sir, what about 10 subsection 10 gratuity exemption? Where payment of gratuity act is applicable or not applicable? Yes, you can claim. What about leave encashment 10 subsection 10 AA? Some deduction is there up to 25 lakhs maximum limit as per the latest amendment. You can claim. What about 10 subsection 10A pension, commuted pension and all? You can claim. What about 10 subsection 10C VRS exemption? You can claim. What about 10 subsection 13B retrenchment compensation exemption? You can claim. This and all is not covered here. Now, what is covered? Suppose if you are having income from salaries, if you want to pay income tax as per these concessional rates, you cannot claim section 16 entertainment and profession tax. You cannot claim leave travel concession. You cannot claim HRA. You cannot claim 1014 except these items. That's it. Are you getting the point? Now I will show you in salaries chapter. In salaries chapter, no, they have given one table. They have given one table. I'll show you this. Wait. Suppose we have computed income. We have computed income under default tax regime for salaries employee. Suppose there is a salaried employee. He has given his salary data and all. We computed as per default tax regime. What we computed as per default tax regime and all. We computed under default tax regime. We did not take HRA exemption. We did not take whatever HR received, we fully taxed it. Whatever leave travel concession benefit is that, we fully taxed it. Whatever special advances and all he got, we fully taxed it. We taxed it fully. Like that, as per default tax regime 115 BSE, we computed income from salaries. We computed. Now, sir, suppose SSC changed his mind. SSC changed his mind, sir. Now he want to calculate tax as per normal regime, optional tax regime, normal regime. Should I have to recompute the entire problem? No need. You see, you just from the salaries income computed as per 115 BS, this is in the ICA material, salaries chapter. You just reduce HRA exemption and you reduce children education allowance, children hostel allowance, food related benefits, leave travel concession, and even HRA already shown, HRA, entertainment allowance, profession tax. You reduce all this. Now, if you reduce all this, which are not reduced earlier, you reduce all these exemptions and deductions which are not reduced by you earlier. If you reduce this, you will get income from salary as per new regime, old regime. That is nothing but optional tax regime. So simple. Getting it? In exam, no, sometimes they'll give you a question. Like they'll give you a question in exam, like they'll give you entire salary data, they'll give you HRA, they'll give you leave travel allowance, they'll give you children education allowance, they'll give you telephone allowance, they'll give you various other allowances and all. Problem. They will ask you to compute income under the head salaries, under default tax regime and optional tax regime, both. They'll ask you both. First, how will you compute income from salary? First, compute as per default tax regime. General, I don't think they'll ask to this extent. To best of my knowledge, they'll not ask, because default tax regime is a very big failure. Default tax regime is useful for whom? Those who are having more than 2 crore income. More than 2 crore income. And default tax regime is useful for those who are having less than 20 lakh income, plus they have chapter 6A deductions, they have various exemptions under various other provisions of the income tax law. Only for them it is useful. Getting it? Those who are having less than 20 lakhs income and having this, suppose you are having income somewhere between 10 to 20 lakhs, you don't have any LIC investment, you don't have any fixed deposits, you don't have any investments, you don't have any chapter 6A, you don't have any deductions, exemptions and all. Basically, you don't have. Whether you go with normal regime or default, doesn't affect for you. For you, concessional tax regime is best. Getting it? Concessional tax regime is best for these SSEs. SSEs having more than 2 crore income. Getting it? SSEs who are especially, not even 2 crore, I can say more than 5 crore income, I will say. Not even 2, more than 5. If at all an SSE is having income more than 5 crore, for them default tax regime is best. Why? If at all your income is more than 5, your surcharge rate is going to be 37%. Whereas under default tax regime, what is the maximum surcharge rate? 25%. Sir, you didn't explain till, don't worry, I'll come to that. Going there only. I hope until now you understood. So how to compute income under default tax regime for salaried employee, and how to compute income for under how to derive income under the head salaries for optional tax regime by using base default tax regime. Simple. So that's it. So that's with respect to salaries related thing. Then suppose if at all you're an SSE having income from house property, if at all you want to go with the default tax regime, you cannot claim interest on loan on self-occupied property or unoccupied property. We all know under section 24B, we are eligible for up to 2 lakhs rupees deduction. Up to how much? 2 lakh rupee maximum limit for interest deduction. That to this 2 lakh rupee, anyhow, in the marathon video you will find. So to which SSEs 2 lakhs rupees limit is applicable, and there are some SSEs for self-occupied property, unoccupied property, 30,000 only maximum reduction. So all that you will understand in the house property marathon video. So right now this video is purely in this particular part. I'm only focusing on amendments. Fine. So interest on housing loan, you can't claim deduction. Interest on housing loan, that too for self-occupied property, unoccupied property, you cannot claim deduction under default tax regime. So if you want to pay income tax under default tax regime, you cannot claim this. Suppose I am a business SSE, sir. Salary also I have, house property I have, I'm also doing business. So if I'm having PGBP, there are so many deductions under PGBP, right? Can I claim all the deductions under default tax regime? No. You cannot claim additional depreciation. We all know additional depreciation we get on new plant and machinery installed in factory. Yes or no? Additional plant and machinery installed in factory, we are eligible to claim 20% additional depreciation. Yes or no? So that additional depreciation you will not get. If at all you want to pay tax under default tax regime, if at all you want to pay tax at concessional rate. So if you want to pay tax at concessional rates, you don't have additional depreciation facility. Not only that, you will not get deductions for contributions for scientific research, contribution to social research, contribution to a company involved in scientific research, contribution to some national laboratory, university, IIT, you will not get deduction. Which means, suppose if you are incurring any capital expenditure and any revenue and capital expenditure under 35 subsection 1 or any capital expenditure under 35 subsection 1 clause 4, in-house scientific research if you are doing, for that you will get deduction. You will not get deduction for what? You will not get deduction for donations. If you are giving a contribution to a research association for scientific research, or for social or statistical research, or national laboratory, university of IIT or any other university or education institution, if you are given donation, generally in PGBP, what you can claim deduction. If at all you want to declare under default tax regime, you can't claim these deductions. You cannot claim these deductions. Not only that, suppose if at all you are involved, suppose you are doing a 2-star and above hotel business, you are doing a hospital business of 100 beds and more, you are running a cold chain facility, you are running a warehouse for sugar, you are doing some specified business activity, 14 businesses we have. If at all you are in those 14 businesses, if at all you want to declare income under default tax regime, 35 AD, investment linked deduction you will not get, which is a very big blow. So tell me, do you think these businesses will go with the default tax regime? Definitely not. These businesses will never go with the default tax regime. These businesses, they will never go with the default tax regime. Even any unit which is established in special economic zone, export oriented units especially, they have deduction for 15 years. First 5 years 100% of export profit, next 5 years 50% of export profit, that next 5 years 50% of export profit provide subject to creation of reinvestment reserve. Getting it? 15 years, any unit established in SEZ from export business, whatever profit is there, no, that is exempted by 50%, 100%, 50% subject to some conditions for 15 years. They also will not use this default tax regime. They won't use. Why? If they use default tax regime, they can't claim. They can't claim this exemption. They can't claim this 10-year benefit. Same way, if at all they are in specified businesses, they can't claim 3580 deduction. Be able to understand. So generally, so suppose no, in exam, no, here also in exam, what they'll give you, I'll show you the concerned problem itself directly. Suppose no, in exam, no, if at all, generally they don't ask like this. I'm very sure they will not ask questions on this. Sometimes in exam, no, they'll give you a problem under PGBP. They'll give you all the deductions. You compute income from PGBP, take all the incomes minus all the deductions except additional depreciation, except contributions for scientific research association, contribution to social association, contribution to Indian company involved in scientific research, contribution to national laboratory, IIT, all that. 35 subsection 1, 2, 2A, 3, 35 subsection 2AA. These deductions you will not get. And 35AD benefit you will not get. Getting it? Except this, all other deductions you can claim, right? Expenditure on family planning, expenditure on interest on borrowed loan, 36 all deductions, 37 all deductions, 35 preliminary expenditure deduction, all that you can claim. No restriction at all. Yes or no? So compute 115 BSc profit as per PGBP without claiming all this. From that, no, claim additional depreciation at 20% of the cost of new machinery acquired during the year and installed during the year. Balance 10% of the actual cost of the machinery installed in the last year and now you claim it. Now that and 35AD. In addition to this, section 35AD, you also claim deduction along with the 35 subsection 1 clause 2, clause 2A, clause 3, 35 2AA, subsection 2AA. All these deductions you claim. You will get profits and gains as per normal provisions. You will get. You see, that's what here it is given, ma. That's what here it is given. So take profit as per 115 BSc and compute this. Suppose, no, sometimes they'll ask you like this, compute income under normal provisions of tax and derive income under 115 BSc. In that case, no, claim PGB, calculate PGBP profit as usual. How you calculate in heads of income when you're learning? In the marathon also I explained. So how you calculate PGBP income normally, calculate as per that. So for that, no, add back. What? Additional depreciation add back. Add back 3580 deduction. Add back 35 subsection 1 clause 2 donation, 2A donation, 3 donation, 2AA donation, all that you add back. You will get income as per PGBP, income from PGBP as per default tax regime 115 BSc. You know, many students, especially in the new scheme book of ICI, I did not like personally. If you personally ask me, the new scheme of ICI book, where in every chapter they discussed 115 BSc then and there, which is not at all correct according to me. Most blunder what I felt, in the institute book, basic concepts, introduction chapter is there now. In the first chapter itself, the entire 115 BSc is discussed. If a student is a repeater, he will understand. How do you think a fresher student understand 115 BSc in the very first chapter? Impossible. Are you getting the point? Because they don't know anything about what is the normal tax regime, what is default tax regime. They don't understand what are heads of incomes first of all. So at that level, the first chapter itself, how come you expect a student will understand? In the old scheme, no, entire 115 BSc is discussed in total income chapter, which is the best approach. In the new scheme only, it is discussed, in every chapter. That too, in the first chapter itself, full provision is kept. So whoever is in old scheme, you are learning the tax subject wonderfully. Why? You don't know anything about this 115 BSc section until you come total income. First you learn entire salaries chapter, house property, PGBP, capital gains happily. Then you will realize, okay, 115 BSc if I have to come, under salaries, these items I will not claim. Under house property, this item I will not claim. Under PGBP, I cannot claim this. Under chapter 16, you can't claim this. Like this, you understand very well. If at all you are discussing 115 BSc at last. That's it. So this is related to PGBP. This is related to PGBP restrictions. Now, under income from other sources also we have restrictions. Suppose if you are having any income from other sources, no, under other sources, gift income is there, lottery income is there, online games income, recently added new provision, 115 BBJ. So that income is taxable under other sources. Maturity amount from life insurance policy, maturity from ULIP, they are also straight away taxable under income from other sources. From that, no, you can claim certain deductions. Deductions you can claim. Like for compensation, interest on compensation, enhanced compensation, flat 50% reduction, family pension, 1/3 of the pension or 15,000, whichever is lower. You can remember all the deductions in other sources. Now you can't claim two benefits. Suppose no, you are an MP or MLA, you are receiving daily allowance or some allowance. Generally, the allowance is exempt under 10 subsection 17, 10 clause 17. But if at all you want to pay tax under default tax regime, you cannot claim this exemption. Same way, if at all any income is clubbed, minor income is clubbed, that barely 1500 rupees only exemption, minor income, and we are clubbing no income of a minor when it is clubbed with the parents' income, how much benefit, how much exempt, 1500 rupees, that they are denying. This 1500 all nonsense. Entertainment allowance deduction for salaried employee, profession tax allowance for salaried employee deduction, and this what minor child related, these three are so basic amounts, but of course you don't get deduction. Remaining all other you will get. Earlier, no, in Finance Act 2022, family pension related deduction also you won't get. But now, as per Finance Act 2023 for May 2024 exam, you can still claim family pension related deduction. How much? 15,000 rupees or 1/3 of the family pension received, whichever is the lower. So 1/3 of the pension or maximum 15,000 rupees. That much you can claim deduction from the family pension. So no, family pension means what? Amount of pension received by family members of the deceased employee. Employee died, his family members are receiving. Therefore, it is taxable for them under the head other sources, fully taxable. Minus deduction for family pension is available. That deduction, whether you go with the optional tax regime, whether you go with the default tax regime, both of you will get. Next. And if an employee who is declaring, if an SSC who is declaring income under concessional tax rate under 115 BAC, he cannot claim entire chapter 6A deduction. No chapter 6A deductions at all. Only 3 sections. ATCCD subsection 2. What is ATCCD subsection 2? Contribution by employer. Contribution by employer to National Pension System, Central Government Health Scheme. That you can claim deduction. Subject to 10% of salary or 20% of gross total income. There are some limits, which you will understand in the deductions related marathon. And deduction for ATJJAA for recruiting new employees. ATJA, that deduction you will get. You will also get deduction for central government contribution under section 80CCH subsection 2 Agnipath scheme. Agnipath scheme, this section 80CCH, this section is added in the new Finance Act 2023. Don't worry, you will find that in the chapter 6A related amendments class. Right now, this is default tax regime concept. In the amendments, you have another timestamp, that is chapter 6A related, amendments. So there you will understand what is 80CCH. Getting it? You will get. Remember, only subsection 2. Here also only subsection 2 deduction. What is subsection 2? All that you will understand in the chapter 6A. You clear? So once again, long story short. So like once again, I'll explain this. 115 BAC, an individual or HUF, they have an option to pay tax in respect of the total income at the following rates. Of course, for 111A, 112, 112A, 115 BB, 115 BBJ, getting it? For all them, special rates of tax applicable. So the tax rate, the concessional rates of tax, I'm talking about which incomes? Normal incomes. Normal incomes means what? Those incomes which are taxable at SSC specific rates. Income specific rates means what? A short-term capital gain on 111A is always taxable at flat 15%. Long-term capital gain is always taxable at 20%. Long-term capital gain on listed shares and all taxable at 10% after 1 lakh. 115 BB winnings is always taxable at 30%. These are all income specific rates. For them and all, 115 BAC is not applicable. 115 BAC is applicable for which types of incomes? 115 BAC is applicable for those incomes which are generally taxable at normal rates. Marathon you watch. In that marathon, basic concepts is there. Inside that, I clearly explained, clearly demonstrated what do you mean by normal rates of income, what do you mean by special rates of incomes, all that I clearly explained. This is an amendments class. I'm reminding you once again, don't think it's a marathon. Getting it? So up to 3 lakhs, 0, 3 to 6 lakhs, 5%, 6 to 9, just 10%, 9 to 12, 15%, 12 to 15 also just 20%, only if the income is crossed 15 lakh, 30%. Some students are by mistake after 15. There some students know what I saw is 15 to 18, 25%, 18 above 15, 30% I saw some students. No, don't mug up 5% increase. No, up to 15 lakhs only 5% increase. The moment it cross 50, straight away 30. 25% slab rate is not there. Earlier we have 25% slab rate, I think. Now it is not there. Next. So what are the conditions to be satisfied? You cannot claim various deductions and various exemptions. So that I have given you headwise. For better understanding, I have given you headwise. Getting the point? Actually, if you look at the original provision, no, it is in zigzag order, but now I have given you the headwise. I hope you understood. Default tax regime section is predominantly over. Predominantly over. And one more thing. If at all you are going with the default tax regime, first of all, if at all yours is a self-occupied property or unoccupied property, interest deduction you cannot claim. What about let out property? You can claim. Whatever interest expenditure is there, you can claim deduction. If at all after claiming interest deduction for let out property or deemed let out property, if at all the house property head of income is going to be a loss, you can set off against other heads, right? Up to 2 lakhs. Up to 2 lakhs house property loss, you can set off against other heads, right? That set off is not permitted. That set off is not permitted. Loss under the head house property with other heads of income is not permitted. Certain losses not allowed to be set off. Certain losses not allowed, would not be allowed. So loss under the head house property with other heads of income is not allowed to be set off. Not only that. Suppose no. Last year, right now I'm in previous year 23-24, assessment year 24-25. Last year, no, I am doing actually specified business. Even this year also specified business, 35 AD. Last year, I have 35 AD specified business loss. Section 73A. Section 73A specified business loss I have. Generally, 73A specified business law, what we will do, we will carry forward it for infinite number of years. No limit at all. So last year, I paid income tax under normal regime. Getting it? I filed income tax with normal regime because I have a loss in 35 AD. This year, what I did, you know, I claimed default tax regime. I did not claim 35 AD loss. I did not claim 35 AD deduction itself. So I went with the DTR. What the section says, you know, 115 BSA. Last year I have carry forward the loss rate. You cannot carry forward now. You cannot carry forward additional depreciation loss. Additional depreciation loss. If such loss or depreciation is attributable to above. So if at all any loss that you are getting in a particular head of income because of these, actually PGBP, this is the only head where loss is possible. In salaries, no, loss is not possible. In salary is not possible. In house property, of course, the loss is clearly mentioned here. The loss is clearly discussed here. Getting it? So in PGBP, if at all any loss is there, that too because of additional depreciation, you have a loss, depreciation loss. Because of 35 AD, some loss is there. Because of 35 deduction, you have some loss last year. That loss you cannot carry forward. You cannot carry forward from the year in which you claimed DTR, from the year in which you declared income as per default tax regime. Suppose this year you declared income as per default tax regime. Last year, whatever carry forward loss is there, that loss how you got, you know, because of specified business. That loss you got because of additional depreciation. That loss you got because of house property, self-occupied property, unoccupied property. Not only you claim DTR, don't carry forward. Not only that, under house property, this year you have a loss again. This year you have a let out property, you have a loss under house property. You can't set off with other head of income. If an SSE who is declaring under 115 BAC, house property loss cannot be set off with other heads. And self-occupied or non-occupied property, interest expenditure itself you cannot claim. For let out property, you can claim interest expenditure. And you have a loss, ultimately, you can't set off. If at all you are going with the default tax regime. And further, maximum rate of depreciation, you know, 40%. Maximum rate of depreciation is 40%. For some pollution equipment and all, the flat 100% depreciation rate is there. But if at all you're going with the default tax regime, if at all any of the block where depreciation you can claim more than 40%, not permitted. You can claim maximum depreciation of 40%. You cannot claim 100% depreciation rate. And any other elements, any other perquisite, whether in a business or otherwise, if at all it is exempted, now it is not exempt. Now it is not exempt. And so here some additional points were given. This point is very simple, very simple. Directly I'll give this example. Directly I'll explain you the example. Suppose, what happened is, last year picture I'm telling you. Last year, for example, previous year 22-23. Right now, previous year 23-24. Getting it? Nothing but assessment year 24-25. This year I'm going with the default tax regime. Whereas last year I went with the normal tax mode. Last year, I have declared income. I have declared income from business or profession, which is actually 10 lakhs. Minus it is. It's actually loss. It's a loss from business or profession. And if you look at this 10 lakhs breakup, why I got this 10 lakhs loss, I will show you my PGBP income sheet. My PGBP income sheet, if you see, PGBP income before depreciation is 5 lakhs. Oh, very good. Before depreciation, my PGBP income is having actually profit. Minus normal depreciation, I claimed 5 lakhs. Oh, very good. Minus additional depreciation I got in last year, that is which is again 10 lakhs. From PGBP, after depreciation reduction, my net PGBP result came 10 lakhs negative. My net PGBP business came 10 lakhs negative. Now tell me, this 10 lakhs entire negative is because of what? Additional depreciation. This depreciation is because this loss under PGBP, nothing but unabsorbed depreciation is there. Total unabsorbed depreciation is how much? Actually, out of 5 lakh business profit, normal depreciation, my business profit absorbed. 10 lakhs additional depreciation I have, right? That is not absorbed by my business profit. So, unabsorbed depreciation is nothing but additional depreciation in our example, which is 10 lakh. What I did, I carry forwarded it as per 32 subsection 2. 32 subsection 2, I carry forwarded. Unabsorbed depreciation, I carry forwarded. Okay, you carry forward. What's wrong? Now, in this year, I claim I want to declare under DTR, right? If I have to declare under DTR, unabsorbed depreciation, I can't carry forward. Yes, agreed. We can't carry forward. What the department is saying, whatever unabsorbed depreciation that you cannot carry forward. How much in our example? 10 lakhs. This is what brought forwarded here, right? 10 lakhs, but I can't set off. I can't carry forward further. Okay, it brought forward because last year I carry forward. This year I have brought forward, but I can't use it. I can't set it off because I'm declaring under DTR. What department said, whatever unabsorbed depreciation you are unable to brought forward and set off and further carry forward, add back this to block of asset, because this depreciation is belonging to some plant and machinery. This plant and machinery last year, previous year 22-23 opening is some 50 lakh minus normal depreciation 5 lakh minus additional depreciation 10 lakh, closing WDV 35 lakh as on 31st March 2023. Now here you reduced this additional depreciation rate. Now you can't carry forward and set off, right? So there is no point of claiming this additional depreciation rate in the last year. So there is no benefit at all because I cannot carry forward it further. So what department said is add back additional depreciation 10 lakhs. Make the block value 45 lakhs. Make the block value 45 lakhs. On this value, you calculate depreciation in the current year. In the year in which you are claiming DTR rate, in this year, you calculate depreciation on the revised block value after adding back additional depreciation, which you carry forwarded and brought forwarded, but could not set off, could not further carry forward because of default tax regime, add back. And on this, you claim normal depreciation. And remember, normal depreciation is allowed under default tax regime also. What is not allowed? Additional depreciation is not allowed. This is what this point says. I'll show you right now. I'll read it. You see here. Let us consider Mr. X, who is carrying on business of manufacturing steel. He is doing a steel business. He has an unabsorbed depreciation as on 1/4/2003. Unabsorbed depreciation on opening date means it's last year depreciation brought forward, which includes amount attributable to additional depreciation of last year. Oh, opening unabsorbed depreciation includes additional depreciation of last year or some earlier year in respect of a block of plant and machinery. If at all he pays tax under default tax regime for this year, previous year 23-24, the amount so attributable, whatever additional depreciation portion is there now of earlier years, which is not absorbed as on 1/4/2023, would not be eligible for set off against current year income, and no further reduction, no further carry forward and all is there, right? Shall be allowed for, okay, shall be allowed, right? Accordingly, the WDV of the block 1/4/2023 as an opening date, block itself is then a block value. How the block value is arrived after reducing additional. But that additional we are unable to further carry forward or set off. Has to be increased by said amount not allowed to be set off. Whatever that additional depreciation we are not further carrying, right? Back to the block. Because in the block computation, you reduced it. You reduced in the block value, but you didn't set off that loss with income or other heads. That's why you carry forwarding. I hope you understood the logic behind this. If not, don't worry, watch the marathon. In the marathon, I clearly explained about in the setup and carry forward depreciation loss topic very clearly. Okay, that's it. So with this default tax regime, entire concept is over. Very simple, ma. Learn as if you are declaring income under normal tax regime only. Don't get confused with the institute material given in the new scheme. No, don't get. First learn as per normal provisions of tax. Forget about 115 BAC. Forget about 115 BAC. You can claim all the deductions. You can claim all the exemptions which are given. Compute normal income. If at all they are asking you default tax regime, what you have to do from the normal income, add back deductions which you claimed but not allowed as per 115 BAC. You will get this. Very simple. Now, what is the time limit? Fine, sir. Suppose no. Okay, what is default tax regime? We understood. What is normal tax regime? We understood. Now, tell me, when should we choose this option, sir? When we should choose this option? You can choose every year, ma. Every year. 1 year you can go with the default tax regime. Another year you can go with normal tax regime. That option is there only for an individual HGF who do not have business income. If an individual and HGF who do not have PGBP head of income, happily he can choose every year. 1 year I'll go with the DTR, 1 year I'll go with optional tax regime, whichever is beneficial for me. Wherever at the end of the day I'm getting lesser tax payment, that option I'll choose. So at the time of filing of the ITR, at the time of filing the return of income, no, you tell your auditor whether you want to go with the DTR or normal. Auditors, no, they will tell you based on the information you give, they will tell you which is beneficial for you. So you just follow that. So where individual or HUF has no business income, the option to shift out or opt out of the DTR along with return of income, you have to exercise while filing return of income for a previous year relevant to the assessment year. In effect, such individual can choose whether or not to exercise option of shifting out of DTR in each case, each previous year. He may choose to pay tax under DTR in 1 year, exercises the option to shift out of the DTR in another year. Here no, one crux is there, I'll tell you. The terminology which they use is so complex again, but I can make it very simple for you. Just observation is important. You know, I'm going to make it very simple. Observation is very important. What is the observation? You know how the wordings are used? SSE exercised the option of shifting out of default tax regime. SSE not, just a minute, that's it. So there are two sentences. One, SSE exercises the option of shifting out of default tax regime. SSE exercises the option of shifting out of default tax regime. Before here there is a point called not. The sentence, no, why they made so complicated, I don't understand. They can simply say SSE chooses default tax regime, SSE chooses normal tax regime, simple. Or they may say SSE want to declare income under default tax regime, SSE want to declare income under optional tax regime. They can simply use these words. No, they unnecessarily made complicated. What? You know, in exam, no, they'll give you questions like this. SSE exercises the option of shifting out of DTR. SSE exercises which option? Shifting out of DTR. Means DTR you are not choosing, you are coming out of DTR. which means you are going for normal tax regime, also called as optional tax regime, under normal system of income tax, where you can claim all the deductions, all the exemptions, like whatever I said now in this particular restrictions, that and all will not apply. Suppose if the SSC not exercised the option of shifting out, remember, by default, that's why it's called default tax regime. By default, you are not exercising shifting out. If you want to shift out of default tax regime, you have to exercise the option carefully. You have to exercise manually. You have to exercise specifically this option of coming out. If you don't exercise the option of coming out, if the SSC is not exercising, the option of coming out, you are declaring under DTR. If you want to come out of DTR, you need to exercise the option, man. If you don't exercise the option, you are in DTR. If you don't exercise the option, if you want to come out, exercise the option. So in IT return, by default, DTR is ticked. If you want to come out of it, you need to exercise the option of coming out. So in exam, they'll give you all the income from salaries, all that. Compute income from salaries for the SSC. If the SSC exercises the option of shifting out of default tax regime, what does it mean? He want to declare under normal rates. Many students, what I have noticed is they are confused between these wordings. SSC not exercised, just word. Exercised means the normal tax regime. Not exercised means default tax regime. Which option? Coming out of the DTR. If you do not exercise coming out of DTR, you are going with DTR. If you exercise coming out of DTR, you are going with normal provisions. Understood? The sentence you need to be very careful when you are reading exam. See, exercise word is there, not exercised word is there. Carefully interpret. Exercising the option. Shifting out. Exercise the option of what? Shifting out, which means it's coming out of the DTR. Be careful. Next. So now, when if the SSC do not have PGBP income, now every year you can choose. Suppose what if the SSC having business or profession income, you have an option to shift out. You have an option to opt out of default tax regime. You have to exercise it on or before the due date for filing the IT return. Once such option is exercised, it will apply for all the subsequent years. Once you exercise, it is saying it is applicable. Getting it? Such person who exercises the above option of shifting out shall be able to withdraw that option only once and pay tax under default tax regime for a previous year other than the year in which it is exercised. Suppose if you exercise a shifting out, means you are declaring under normal regime. You are declaring under what? Normal regime. Okay, happily go and declare. Even for the subsequent years also go and declare. For previous year 23-24, you declare normal regime. For remaining years also declare normal regime. 23-24, right now 23-24 assessment of 24-25, I declared under normal because I exercised the option of shifting out. So I declared under normal mode. Next year I want to declare under default. Next year what I did, I withdraw the option of exercising of opting out. No, exercising of opted out, I withdraw. Means I declared under default tax regime. Then after, you are never eligible to exercise that option. Except where the person ceases to have a business income. Just a minute. That's it. You see, for business SSCs, very severe. First year, 23-24 financial year, you are declaring, right? Income. If you are declaring income by exercising out, by opting out of normal tax regime, and by opting out of default tax regime, you have to declare under normal regime only forever. Suppose in the later year you withdraw. Like let us go with DTR. You can only go with DTR forever. Unless your business is closed. You don't have PGBP income further. Once PGBP income is not there, every year you can declare freshly. Every year you can choose. Where there is no PGBP income, 1 year you can choose DTR, another year you can choose other than DTR. And one more thing, if an SSC who is declaring income under 115 BAC, an SSC who has not exercised the option of shifting out, which means he's going with DTR, he will not have AMT responsibility. Alternate minimum tax under 115 JC, JD, they will not apply to you. Getting it? That's it. This point is not required. This point is not required. Here they just simply say the SSC has to take most beneficial treatment. If at all who is not having business or profession income, he just have to take a beneficial treatment. Then we have surcharge concept under optional tax regime, rebate concept under optional tax regime. I will be discussing this in the continuation. Just watch continuation. I'll be discussing this. Okay. Let's continue the discussion of surcharge and rebate concept under default tax regime. Earlier, we don't have any separate, tax rates for surcharge, separate rates for rebate and all for default tax regime. It is same old rates which are applicable. But now, for default tax regime, the surcharge rate is maximum restricted to 25%. In fact, I told you at the introduction of the default tax regime itself. This is very useful for those individuals who are having more than 5 crore income. High salaried people or high net worth individuals, for them it is best to go with the default tax regime. Those who are having more than 5 crore income, because surcharge rate, we all know, normally under normal tax rates, if the surcharge rate is more than 5 crore, what happens? 37%. Sorry, if the total income is more than 5 crores, what happens? The surcharge rate is 37%. But here, maximum surcharge rate is 25% only. The moment your income crosses 2 crore, it is not 2 to 5, 25%, beyond 5, 37. No, not like that. Beyond 2, whatever income you have, on that whatever tax you have computed, 25% is the maximum surcharge rate. The surcharge rates are same rates like normal tax regime, optional tax regime, normal. Just that the fourth slab is there, right? One slab, fourth slab. What is the fourth slab? 2 to 5, 25. Beyond 5, 37. That point is removed. The moment it crossed 2 crores, straight away 25%. Just like in normal tax regime, if the total income including dividend everything is more than 50 lakhs but not exceeding 1 crore, 10%, including dividend and all, it is not exceeding 2 crore but more than 115. If at all excluding dividend, the total income is more than 2 crore, 25, but on the dividend component, capital gains component, it is 15%. Suppose if at all your total income is more than 2 crore only because of dividend and capital gains. If at all you don't have a dividend and capital gains, your income is less than 2 crore. Because of dividend and capital gain only, your income as a whole crosses 2. In such a case, the overall surcharge rate will not exceed 15%. Able to understand. Next, same marginal relief. Whenever there is a surcharge applicability, marginal relief is also there, right? We already discussed it in the, it is covered in the marathon basic concepts discussion. Relief. The relief concept is applicable even under both the tax regime. Like under default tax regime also, relief concept is there. Even under normal tax regime also, relief concept is there. Next, rebate. They have added a proviso. To section 87A in the Finance Act 2023. In the Finance Act 2023, under 87A, they have added one proviso. As per that proviso, if an individual is declaring his income, if an individual is declaring for an individual resident, if at all he is declaring income under default tax regime, if at all he does not exercise the option of shifting out, means he is declaring income under default tax regime, he is also eligible for 87A rebate at an increased limit. It's not a 12,500. Generally, 87A rebate is what? If the total income is not exceeding 5 lakh. If it is not exceeding 5 lakh, you have a rebate of up to 12,500 rupees from the basic tax. Getting it? Basic tax means what? Before education cess, before surcharge, before relief, whatever the basic tax is there, right? That basic tax. From that, you are eligible for how much rebate? Maximum 12,500. Now, for default tax regime, the rebate limit is, the threshold limit for rebate is 7 lakh. Getting it? If the total income of an individual does not exceed 7 lakh, the rebate shall be equal to how much? Tax payable or 25,000, whichever is less. If you calculate 7 lakhs on 7 lakhs tax, remember in a new tax, in this default tax regime, no, you don't have limits for normal citizen, senior citizen, super senior. No, not such a kind of classification is not there. Cost to 3 lakhs is exempted. 3 to 6, 5%. 6 to 9, 10%. But here it is only 7 lakhs. So 3 to 6, 5%, right? 15,000. And 6 to 7, 1 lakh, right? 10% means 10,000. So what is the total tax? 25,000. If at all you're exactly having income 7 lakh, your total tax is 25,000, basic tax. Now, minus rebate how much? Rebate how much? Since income is exactly 7 lakhs, not more than 7 lakhs, not exceeding 7 lakhs. tax amount or 25,000, whichever is lower. Tax amount is 25. Even 25,000 is a monetary limit. Whichever is lower means 25,000. So balance tax is 0. Plus education is 4%, obviously 0. Are you getting it? Now, a kind of marginal relief concept is also introduced here. It's a similar to marginal relief concept. Suppose, no, very simple. I'll show you. See, very important this one. In the recent MTP also this point is asked. Suppose if the SSC is having 7,15,000 income, 7,15,000 income, for example, 7,15,000 is the income. Now, for him, no, what is the tax? Generally, we know if at all income is 7 lakhs, 25,000 tax, rebate also 25 is there, 0 tax. But just because the SSC has got 15,000 extra income, what is happening, department is asking to pay first 3 lakh 0, next 3 lakh 5%, next 1.15 lakh 10%. So here it is 3 lakh into 5%, 15,000. Here it is 11,500. So how much it is? 26,500 rupees tax is coming. So what is the basic tax now? 26,500 minus, is rebate applicable? Array, income is more than 7 lakh, man. How come rebate comes? So 0. So straight away 26,500 plus 4%, whatever tax amount comes, that much department is asking to pay. Unfair, right? Array, my income is just 15,000 extra. If at all I have only 7 lakhs income, not 7.15 lakh. If I have only 7 lakhs income, I have to pay 0 tax. But now you see, just because my income is 15,000 rupees extra, you are asking me to pay 27,000 approximate tax. How fair it is? It's not at all fair. If at all a situation like this comes, what SSC will argue? Sir, on 7 lakhs my tax is 0, right? Whatever extra 15,000 income I got, now you take it if you want. Don't ask me this tax. I will give you 15,000, sacrifice my income itself. Exactly. That kind of marginal relief concept is brought even in the rebate. So what department said, okay, fine. So if at all your income is, suppose if your basic tax is 26,500 and if your income is 7,15,000, we'll see one thing. So what is your income? What is your total income minus, total income minus 7,15,000. How much tax department is asking? 26,500 department is asking. For extra income of 15,000, department is asking 26,500. What is your argument? If you want, I will pay 15,000. The whatever 15,000 taxes, I will pay that happily. Don't ask me further. This is what SSC argument, right? This is what the SSC's argument, right? So what department is saying is, so there is a format, you see here, there is a format straight away given, very simple. Total income minus 7 lakhs. In our example, how much? 15,000. What is the tax on the total income? Income tax payable means only basic tax, only basic tax. What is the basic tax that we computed? 26,500. Is B more than A? Yes. Just because I got extra 15,000 income, you are asking me to pay 26,500 tax only for 15,000 income which I got extra. If at all I don't have this 15,000, my rebate would have been 25,000, my tax would have been 0. Just because I have 15,000 extra income, you're asking me to pay 26,500. So is B greater than A? Are you asking more tax because of more income? Yes, the tax that you are asking is more than the income I got. Therefore, rebate is equal to how much? B minus A. 26,500 minus 15,000. So how much is the rebate? 11,500. Now what we should do this rebate? What is the basic tax that we computed? Basic tax we computed 26,500. Now from this rebate you reduce how much? 11,500. So what is the balance tax? 15,000. For this add education says 4% and pay. That's it. So 15,000 plus 4%. 15,600 you have to pay over. This is what department argument. This is how department is giving benefit to the SSC. This is how department is giving a benefit to the SSC. In the recent MTP, one MCQ has been asked for 1 mark exactly on the rebate concept. So just like that, suppose if your income is 7,25,000, suppose if your income is 7,25,000, how to compute tax? Very simple. First 3 lakhs, 0 tax. Next 3 lakh, 15,000 tax. Next 1.25 lakh, 12,500 is the tax. Total basic tax is how much? 27,500. So my actual income is how much? My step 1 calculation of relief for 87A. Getting it? Step 1, 7.25 minus 7 lakh is equal to 25,000. Step 2, what is the basic tax on actual total income? 27,500. Is step 2 more than step 1? Yes. So step 3, 2,500 will be the rebate. So 2,500 is the rebate. So 25,000 is the balance tax you have to pay, plus 4% which is 1,000. So 26,000 is the tax payable. This is the same question asked in the MTP. So very simple. I hope you understood. So in the rebate, marginal relief concept is introduced. Marginal relief is also similar. Generally, when surcharge is a marginal relief is applicable. Just because if my income crossed 50 lakh, 10% surcharge you're asking, extra tax you're asking, but my income crossed only 1,000 rupees. For that, you are asking me on my total tax 10%. Same logic. For better understanding, watch the marathon basic concepts. In that surcharge topic, relief topic, I beautifully explained with the live, with the many examples. Getting it? So I hope you understood this step. So how to calculate relief? Getting it? How to calculate rebate? How to calculate rebate if at all income is exceeding 7 lakh? Total income minus 7 lakhs, how much? Check out. On the total income, whatever total income, what is the tax payable? Check out. If this is more than this, rebate is there. Rebate is there. So rebate is equal to B minus A. Here, rebate is computed on lines with the marginal reliefs. How marginal relief compute? On same logic, rebate is computed here. Then whatever basic tax you computed, from that reduce this rebate, whatever is calculated as per these 3 steps. Then balance tax, for that add 4% education cess over. So with this entire default tax regime, surcharge concept, everything is discussed. Now with respect to surcharge calculation, marginal relief calculations, in the marathon basic concepts, it is clearly covered. Getting it? If at all you already watched, no problem. Otherwise you can go and watch it. That's it.